The day has come. The CPI data shall be released probably by the time many of you watch the recorded video later on. And a lot is going on in the crypto market. We have the SEC with Paxos and BUSD saga that's currently going on. And you can see the way that the price is reacting over here. So a couple of coins on the hour have started to pop green. Most of them are going to be red. And on the daily, most coins are still currently in pullback mode. So the question is, what do you do today? Well, let's get straight into it. There is a lot to cover. And I actually want to start off with opportunity. So looking at this tweet over here from Avi, he says that the common sentiment due to these regulatory actions is that it's bad for crypto. Well, obviously true in the short term. One, it builds stronger decentralized architecture. And number two, don't forget that the market bottomed right after the FTX filed bankruptcy. So for those of you who have maybe been under a rock for the last 24 hours and you have no idea what I'm talking about, essentially the SEC came out and have basically told Paxos that they're no longer allowed to issue BUSD, which is Binance stablecoin. Now, when you understand the magnitude of the stablecoin market, you'll realize that quickly that this becomes quite a big problem, and it might mean that they're coming after other cryptos as well. So he says, remember, being greedy when others are fearful can sometimes look like being stupid. Buying blood when regulation threatens the asset class, while others are smart, de-risking after regulatory action. Cautious here, but the headline presents an opportunity. And I would always tend to agree with this, but only if the charts line up. And do the charts line up? You guys know where my sentiment lies regarding the charts and what I've been looking at. So at the end of the day, I do think it could present an opportunity. But with that being said, you need to be extremely careful because it can quickly go the other way and turn out to be a mega bull trap. And if you look at this over here from Michael Jordan, I don't think it's a basketball player, Michael Jordan, but he says, I know more about crypto regulation and the impact than I wish that I did. But below is a very useful model from too long thinking about this. Regulation generally has a hormetic effect. Too much kills, but mild exposure improves the resilience of the system. So he essentially shows when it comes to regulation, you have segments of 1, 2, 3. Pretty much 2 is the only segment where it works out as a positive. And if you have a look over here, zone 1 is when there's no regulation at all, right? So then you get a high incidence of fraud and scams like we had with FTX. It creates disadvantage for zone 2 participants who want to flourish and succeed. So big money may be resilient and not want to come into the market if you are in zone 1. He says that each incremental guidance improves the system. And then he goes on to zone 2. And he says this is now when you have balanced regulation. So that is when you have the maximum amount of clarity, increased market participation, increased capital formation due to predictability and resilience. And then there's a higher cost to operate at those. So it contains optimal equilibrium state where less or more guidance is worse. So ultimately, this is where you want to be. And this looks like where we're going, at least in the short term. But if the SEC overshoot that and you go into zone 3, it could quickly turn out to become rather disastrous for crypto. And he shows here zone 3 is when you have those draconian regulation measures that calcifies the market structure with high barriers to entry. It suppresses the market forces for price discovery. And then there's high rent taking. Natural demand will then shift to markets, other markets that are in zone 1 and 2. Essentially, that means that you can kind of kill off crypto. So the too long do not read this is the crux of the issue. There are many issues that would move crypto from zone 1 to zone 2, which is the best interest of consumers. The danger then is going to be when the action happens from moving from zone 1 to 2, like enforcing everything without any guidance. So everybody better be hoping and praying that we end up in zone 2. Otherwise, it's going to be quite a bad situation for crypto in the longer term. And if you look at this whole stablecoin supply, if you look at the DeFi segment that it formulates, it's 79% of the trading volume comes from stablecoin pairs within the DeFi sector, just showing you the absolute magnitude and size of this DeFi industry and how important the stable coins are. Without them, we're in a lot of trouble. So why did this all happen? The issue wasn't actually that there's a problem with Paxos and BUSD, but it was that they bridged BUSD to the BSC chain. So if you look in this notice regarding Paxos, which was issued by BUSD, it says, it is important to note that the department only approved the Paxos-issued BUSD, but on the Ethereum blockchain. The department has not authorized Binance Peg BUSD on any other blockchain, and Binance Peg BUSD is not issued by Paxos. There is currently no restriction on the listing or exchange in New York of existing Paxos-issued BUSD by DFS licensed entities. So if you dig down this rabbit hole, you'll see some interesting things that unfold. So he says here, what caused BUSD to fail was being bridged again to BSC by Binance. And will this affect the other stables? Well, if you look at the data at how much supply has been bridged by third parties for each different stablecoin, here are the essential results. So on USDT Tether, you have 6.4% has been bridged. USDC is 8.24%. BUSD was huge with almost 30%. And then TUSD is only 1.9%. So basically what that means is that there could be implications on the other stablecoin contracts over here that have been involved and bridged onto other chains. So very, very interesting unfolding, and we'll need to watch this closely. But how did this all happen? Well, according to DB, Circle alerted the watchdog last autumn to issues that its team had surfaced in blockchain data that showed Binance did not store enough crypto in reserves to support tokens that it had issued. Around the time when Binance stopped support for USDC, and then they started auto-converting into BUSD. If any of you used Binance, you'll know that they had that option over there where pretty much they made it seem very easy and seamless, and at the click of a button, you could convert all your other stable coins into BUSD, and then you could save on your trading fees. So that is essentially what happened. And because of that, Circle, which pretty much runs USDC, they went and reported Binance, and this is essentially the saga that we're currently within. Now, what from here? What happens next? Well, if you look at Adam, he says that Paxos halting BUSD issuance, requiring redemptions, and then you have until 24th of Feb to off-ramp unless regulators force their hands further. So you can literally redeem your BUSD, but you only have until February the 24th. And he says that's it for BUSD, given Binance was offloaded by its last US bank in the past few weeks. So Binance is going to have to find other banking partners in other parts of the world to obviously continue their business. But it looks like as for the US, they're in trouble, and that's the end of it in the US. He says the scary part, and this is very, very important, will be that this means we're going to find out if the non-Ethereum based BUSD on BSC, etc., which Paxos didn't issue and Binance issued themselves, is actually fully backed. So are they fully backed? That's the question. Recently, they told us it was overissued by an accounting error. You guys remember from just a couple of weeks ago, they pretty much said they are 100% one-to-one backed. This was when the whole FTX saga unfolded. And they said when audited, they said the issue was due to an accounting error. And now we're going to find out the truth over here. Are they going to be caught with their pants down or not? And he says 3 out of 3, they claim to have fixed this. But now we'll know for sure if each BUSD is actually backed by real US dollars. Although if Binance lost its US bank and has lost Paxos, it raises serious questions as to where they would be storing large amounts of USD at all. So where are they going to move to? This is going to be an interesting segment within the crypto sphere. And this is when you want to be very, very careful and manage your risk, because they have the potential, if this goes south, if this turns out bad, it has the potential to really prolong the crypto winter for much, much longer than we initially anticipated, possibly even a year to a year and a half longer. And I think you guys may remember that I used to bring up this quite a bit, well, a couple of weeks ago, looking at the cumulative volume deltas of the spot on Binance versus the other stable coins over here. And Exit Pump shows over here BTC spot CBDs. Now that the SEC has sued Paxos over BUSD, it's clear why so much BUSD were minted to buy Bitcoin, which of course caused this rally. Remember, I said that I showed you guys that chart, pretty much this exact chart over here, where this was looking like this whole rally was driven by BUSD spot. At least the spot was driven by BUSD stablecoins as opposed to the other stablecoins, and now we know why. It's absolutely insane. And he says, which of course caused this really interesting and fun strategy to exit from BUSD and rotate to USDT plus USDC. Basically bought Bitcoins with BUSD and then they sold them for USDT. So that's where we're currently at now. Now, if you look at the cumulative volume deltas, you'll notice the bottom one over here is Binance. Look at that massive, massive sell-off. So they pumped the price up and then they drove, or at least they started to jump out of those spot positions over there. But now that led to the other cumulative volume deltas of the other spot driven pairs to basically increase over time. So you have a massive, massive divergence over here. And if you want some answers, check out CZ, just posted now a couple of minutes ago. I'll talk to you live in about 8 hours with a wink face, obviously coming in with a lot of confidence, saying that everything will be fine. I mean, I might be reading into the tweet a bit much, but he does seem pretty confident. So maybe he saw this coming. Maybe he has a card up his sleeve and a big plan around this. That's not the only important news. Of course, the bigger driving event for macro markets is going to be the CPI, which comes out early this morning. I think that's 8:30 a.m. EST, so in a couple of hours' time. And you currently have the previous one at 6.5 and the forecast is at 6.2%. If you look over here at 𝗕𝗬𝗕𝗫, he says he had the CPI estimates for tomorrow, as per the banks, on average comes to a median of 6.2. A couple of them are reading as high as a potential for 6.7%, and then some of them are on the lower end of 5.8%. So we'll be keeping an eye out on that. And if you look at how the markets reacted on these CPI events every single day, pretty much over the past year, at least this is for the stock market. What I want to be more focused on is what's happened this year and the end of last year. And you can see the trend is green. So will that trend continue to be green? Well, we'll just have to wait and see. Anything that comes in overestimate, of course, is going to lead to a market sell-off, especially since the stock market has pushed up higher than most people would expect. And if it comes in better than expected, the market's going to continue to rally. And if you look at the stock market, it's actually only about 15% from all-time high. What I found super interesting is go and have a look at some of the other countries' stock markets. You'll notice that a lot of them have already been closing at all-time highs. And I was looking at a couple of tweets from Jason Pizzino, and he was saying that pretty much you don't really see this in a bear market where you have closing candles on a weekly chart, high time frame for stock markets closing at all-time highs. And he was suggesting, how long will it be before the US stock market does catch up, which does assist me, at least with my slightly bullish bias, where I'm looking for a little bit more upside, at least calling this a bear market relief rally that I don't think is over, not necessarily a bull market per se. So I wanted to actually mark off on a very high time frame, top-down analysis, looking at the high time frame and working our way down to kind of see where are we actually at. Sometimes you need to zoom out. When in doubt, zoom out, take a step back and kind of reevaluate. And this is what I was looking at. I marked off all the key yearly levels. Okay, we have the yearly open. Then we have a key yearly level coming in from the body open and close over there. Let's zoom in to make it a bit clearer for you. We have the next yearly level at the top, and we can kind of derive our ranges like this. Another key yearly level, and then we have the wick high, which is this current yearly level. Now, zooming in, you then want to mark off with the fib retracement level, kind of work out the ranges. Where's the mid-range of that yearly level? Where is the 75%, the 25%, and then you have the range high, range low. Monthly level, let's drop down onto a lower time frame and then kind of see how this whole picture comes together. So if you take a look at this, put on the monthly level over there, we're looking at a key monthly zone. You can see over here, body close, body open, and then very close to that body, very close to this body over here. So this is one key monthly level. The next one that I have is this one over here, which matches up with the body close, body open, which led to the major sell-off. And you'll see this kind of lines up around that mid-range zone. So now you want to drop down onto a lower time frame. Let's look at a weekly chart, and you'll see how this all adds up. So looking at the weekly chart, most of you know already, right? You have a bit of a range that's forming over here, but how does it relate to those key monthly levels? And you'll see we are fast approaching that zone right now, which is a strong mid-level of support, which lines up not only with the mid-range of the key yearly, but also lines up with the key monthly levels. That is really one of your worst case scenarios. You don't really want to go any lower than that. So range high, range low, those are the zones that I'm looking at. And then using other indicators, I like to kind of just zoom out when the market starts to change and kind of discover what exactly is going on here. So using the Lucid SAR, I've shown you guys this before. For the most part, it governs the trend. We did break through that level. Those Lucid SARs are now increasing, and ultimately, I'm watching for this zone over here. Bitcoin can temporarily dip under $20,000 to that 19.8 level, but I want to see that left as a wick and quickly react out of that zone. That's what I'm watching on the high time frame. What about if you put on the 12 and 24 EMA? Then it gives you additional levels of confluence. You can see how these are trending up at the moment. And ultimately, you want that to cross. You want the white to cross above the orange one, which is the 12, to cross above the 24. Once you see that cross happen, and it happens at the same zone over here, that's an additional level of confluence for potential zone for price to bounce out of like that. And then you can take it from there to see if you can clear the yearly high. On the contrary, however, if it fails to do so and it breaks below here and retests and holds the zone as resistance, so flipping that what should be support into resistance, then I'm going short. Of course, then you're going to short it all the way back down to the range lows with the potential of breaking that zone. And then you start to look at your next levels. So you can see how we're working level to level, right? You had this level over here, one candle. Not many people had the opportunity to play that. It happened so quickly. Then you came up to the top of this level, down to the next level. Now you're still playing within this range. If you start to break out of that zone, you have levels above, which is a key yearly level. You can see it over there, key yearly level. Or if you break below, this is one of the reasons why I was looking at that 13,880 as a potential low target. And not to say that this can't happen, but if you start to lose that range low, then you move to the next level. I hope that helps. This is just to give you a bit of higher time frame perspective of how I look at things, and maybe it will help you, maybe it won't, I don't know. But I think it is pretty useful when you look at the levels of confluence. Feel free to go back test this. I've shown you how to do it. Put on the 12, the 24, go look in the history of Bitcoin and how prices reacted at those zones. Pretty much you can see over here, let's just look at the most recent action. That pretty much crossed to the downside, and it held price down for the good part of over a year. So there we have it. All right, same zone over here, lining up at the 21 exponential moving average, still coming up. Price is wicked into the zone. There is demand kicking in, and Bitcoin is slowly bouncing. Yesterday, the S&P 500, the ES, had quite a strong daily candle close. So looking like it's forming the next higher low over here already. I'm sure this is catching a ton of bears off guard. I know most hedge funds have been positioned to the short side, and soon they're going to have to start covering those shorts. And that's when you get that massive short squeeze, right? Then you can quickly head up towards the range high. I wouldn't get overly bullish over here. If the S&P 500 does start to rally towards that 43.30 zone, 100% I'll be looking to take some profits over there. I don't expect that it's just going to smash through that level on the very, very first go. So a little bit of a contrary to popular belief opinion that I have over here. And one of the reasons is this. If you look over here from Satoshi Flipper, he says, while everyone is being kept busy with crypto FUD, inflation, recession, unemployment, and other distractions, the only thing that really matters isn't even talked about in our circles. That's the global money supply. It bottomed in November, and now it continues to grow higher. Definitely, guys, keep an eye on this. Keep an eye on this global money supply. If the global money supply goes up, there's liquidity. Markets then tend to go up, right? As long as there's liquidity. If this trends down and they continue to shrink the balance sheet, then pretty much, of course, the market is going to struggle to rally, and then you're having an eco rally where all the liquidity is just flowing from coin to coin to coin within crypto. So I am watching that over there. The dollar failed this key yearly level once again. Looked like it was really going to hold that zone, especially when you look at the previous candle over here, this one that happened on the 13th of Feb. You wick down into that, looked like a strong candle that was going to probably spring the DXY up higher. But here you see it. DXY is coming down. So still keeping an eye on that. Don't want to make too many predictions on the DXY yet. I'll just keep an eye on it. But key early level, anything above bullish, anything below, typically bearish for the dollar. Total 3 has been getting smashed. We identified a couple of days ago the double top pattern over here, breakdown of the trend line, and I told you there's quite a lot of trouble if you start to break below the dotted line. We've broken below the dotted line. Yes, you're going to get a bounce over here. Now you need to see, is this bounce going to fail just like the rest and form another low high? If so, you probably don't want to be holding altcoins. If you are holding altcoins whilst total 3 is going down, you're betting against the trend. The trend is beginning to reverse. Bitcoin looks a little bit different, more hopeful than the altcoins. The altcoins have been getting annihilated. But across the board, in all defense of the total 3, a lot of the altcoins do look primed, at least for a temporary bounce. On the 4-hour charts, a lot of them have hit their support zones. I don't have the time on today's show to run through all of those, but a lot of them have hit their support zones. All right, just give me a second. All right, so let's have a look over here at Bitcoin on the daily chart in relation to the pullback that we were looking for. We're looking for an average pullback based on the history of being overextended from those golden cross zones, the 200 and the 50 of 12.09%. Take a look at that. It pretty much came directly in line. It's about 0.1% away. I think we pulled back 12.08% as opposed to 12.09%. So all statistically in line with the zones that we were looking at. Now what we want to see is a higher low formed over here. I would say today is going to be extremely, extremely choppy. You're going to see price running both to the up and the downside. If Bitcoin is able to hold above this wick over here, you give the bulls the benefit of the doubt. If it starts to come back below that region, then there's a possibility that a lot of people are going to get stopped out because new participants who have just recently longed will definitely have their stops underneath this wick. And if you lose that level, you're probably coming down to at least this zone. I'll give you this zone. Let's just mark it off. Mark off that wick over there, 20,358. If you lose that wick, 20,358 is probably the next zone. Now, what is the reason? Let's go on to this one here. That might be a little bit of a cleaner chart. I just want to take off all the indicators. What would the reason be for having a bullish bias? Well, ultimately, guys, you want to look for a change in structure within the market. And if you haven't picked that up yet, then I hope that you do now. You had a strong downtrend, right? Down, pretty much lower highs, lower lows, and there, first higher low, but marginally we're kind of consolidating in this region. Massive push up. Convincing higher high. This is not a marginal higher high. This is a convincing higher high in relation to this zone. Break of structure. You're now looking to your next support zones. In a trending bullish environment, you typically want to see the what they call the shallow fib, the 0.382. You want to see that level hold. That's coming in at 20,904. I was hoping that we would actually pull back deeper yesterday into the zone. Yesterday, I told you, look for the pullback. If those levels get reclaimed quickly, if you reclaim around 22,000, which we're still yet to do, that would probably signal most of the bears to tighten up their stops, pretty much to break even or to close their positions. And that's likely going to lead to another spike up. So this is kind of the areas that you're looking for a higher low. Although this zone may fail, if it does fail, you then want to look to the 618, which is going to be the range low support. That would be quite an aggressive sell-off over here, simply due to the amount of stop losses that would have been placed over here, and that will create a liquidation cascade. But ultimately, you would still be looking for a potential for a higher low and market structure to shift. So do you see that over there? I hope that does help. We're still very much range bound. We are range bound, but we have the potential for the trend to reverse because of the break of structure. So I hope that does help you guys. That is essentially my reasons for looking at this. Again, you can see that key level, right? It keeps coming up, 20,300. Look at the volume profile over here. This is your point of control. Your point of control is at 20,307. If you start to break below that, again, yes, cut positions, you're looking to range low. If you can hold above that level, then it's an opportunity for a higher low and for prices to get sent towards at least that 26K region, and then we take it from there. Okay, low time frame. Low time frame on the 4-hour chart, narrowly holding onto the 200 exponential moving average on the 4-hour chart. So let's see, you really don't want to see prices come down below this level again. I told you yesterday you had about 24 to 48 hours, at least as a bull. Bulls have 24 to 48 hours to continue to hold prices without them breaking down, without a major breakdown. If they can do that, then I think that they'll have a chance of cracking this resistance zone, which is the diagonal trend line governing from the key monthly high, the high from the 7th of Feb, and then you're going to observe once it gets here. You have already a 1 to 3 risk to reward ratio if you bid this region from here with your stop below there and up into this zone. Once you get here, tighten your stops, check if it can break through. If not, close your position, because then the downtrend will commence. So that's what I'm looking at on this time frame over here. But for bulls, yeah, you really need to get above these moving averages or the exponential moving averages very, very quickly. If it holds and hangs around here for more than another 24 hours, I would consider taking my long positions off of the table and rather just sitting sideline. By the way, being a retail trader has a superpower. That superpower is you have the ability to trade or not trade. You don't have to be in every single trade. When you're kind of in no man's land, you have the choice as a retail trader, which massive hedge funds, they can't do that. They have to put the money into something. You can sit on the sideline. So consider that option as well if you are unsure with regards to what the market is doing. Okay, momentum oscillators. Let's quickly look at it on the daily. I think that they are just about to turn up. So you can see still hovering around here. But if these stochastic RSIs can start to tick up towards the blue zone around 19 to 20, then you're probably going to have a trending move that has enough momentum to break through this. And this will start to look like what was the opportunity for a higher low. You can see over there as well, the 200 EMA, we wicked literally directly into that zone and demand kicked in straight off of that. Remember, a lot of algorithms as well. So the algos that trade the bots and stuff, they trade off of these exponential moving averages. So if they do reclaim the low time frames, they'll be buying off of the 200 EMA on the 4-hour chart. They pretty much are buying off of that right now. And then, of course, if the move continues, they will continue to buy, and hopefully you can establish a new trending move. All right, guys, that brings us towards the end. If you do enjoy the content, please give the video a like, hit the bell notification, and subscribe to the channel. And then a final reminder as well, we do have the Rolex giveaway, the Submariner Black, and we have the Submariner Blue and Gold, which is this one over here. Let's just let that focus. Oh, there we go. You can see it nicely. Beautiful. Stunning watches, absolutely exquisite timepieces. If you do want to win one of these, all you have to do is enter into the competition. How do you enter into the competition? Very simple. Just look in the description below, click on ByBit, sign up. Each trade that you take is an entry into the competition. The ByBit one is for the blue and gold Rolex, and the Bitget one, which is below over here, is for the black Rolex. And that's it. I think that's it. Anything else? I will see you all on the next show. I am busy with a big project, guys, at the moment. So if I'm not as active on Twitter, the reason why is I'm actually recording Crypto School at the moment. Hopefully it's going to be out sometime towards the middle of March of this year. So I've been mega busy with that. And that's it, guys. I will see you all on the next video. Have an absolutely stellar day, and cheers for now.